get in from Shujal Rehman. He's the CEO of the company, but there's some interesting tidbits about him. He has held leadership roles from Seat, Mondelez, Marico, Apollo Tyres. So he has seen a lot of corporates and different segments as well. He's the chairman of Pune zone at CII as well. That's a prestigious position. And also education coming in from Harvard Business School and Aligarh Muslim University. So pretty interesting, history coming in from Shujal. But just to get everything in perspective, let's ask the first question itself, getting him with us. And Shujal, the first question I would like to ask you, especially, first of all, good afternoon, and it's always a pleasure to have you at NDTV Profit, is the business sentiment. How is the business sentiment looking like, especially with so much volatility in your export business right now?
Thank you, Sharad, and thanks for having us on the show. I think the last 3-4 months we have seen the Iran war and the play out of that. For us, the impact was on raw material. It increased by about almost 70% in 12-13 days. Fortunately for us, we are a company which is in the value-added segment, and our products are innovative, and many of the products have patents. So we are able to pass through the raw material hikes to our customers. Obviously, there is a lag. As we speak, what happened was in the month of March and April, we had concerns about raw material availability. So, we were able to stock up raw material, and you would see in the March balance sheet also that there's stocking up in raw material. And that's the reason why you mentioned a while back that the inventory has increased. Another reason for us where the inventory increase was due to the transit. What happened was in March, many of the material was to reach to our subsidiaries in Norway or in Chile, which obviously are 60 to 75 days transit from India. They couldn't reach because of this geopolitical issue, and obviously inventory, which is GIT, also increased, which was basically confirmed orders. So that was the impact we had last year. This year, so far, as we speak, things are looking okay. Raw material is still holding on; it's not dropped. Supply is, as of now, not a concern of raw material. Many of the orders which we were expecting have also come, and things are looking good for quarter at this stage.
Right. That means the supply chain issues have normalized going ahead. And also, if you look at it, the way the momentum is building up for the value-added products, you also deal in the niche segment. That is where a little bit of strength also lies. But I want to ask another angle to it. Recently, of course, the India-UK FTA was completed. And a lot of new industry opens up for your company also regarding the products which you have been talking about. Shujal, I just want to understand, what incremental benefits can come in for Garware Technical Fibres?
Actually, when the FTA was announced a few 5 days back, I was in UK only, and we met some customers. So obviously, there's a benefit for us. There'll be some duty impact benefit which will be there for us, but the bigger benefit will be for our customers. Scottish salmon is a big salmon species, and it's a very profitable and a very premium segment for our customers. They want to sell it in India, and this opens a door for them. And in fact, they came and visited our facility and also met some customers, their customers. So it's actually win-win for both of us. From our side also, it's positive, and from our customer side also, it's positive. So I think it's a good move.
Fair enough. It's a good move, and hopefully in the coming quarters, you can quantify that also for us, because a lot of discovery needs to happen. The street generally doesn't look into detail about technical textile companies like yours, and I feel there is definitely a value, a value here. But speaking of pricing power, there seems to be, you are having a good bargaining power on the pricing segment, on the pricing power, and I'm sure the raw material costs have gone up. So by when this calibrated price hikes can start coming in, second quarter, or you'll just take it, by the end of the first quarter itself?
No, I think in quarter one itself, price hike impact will be there because we were able to pass through. There is a little bit of a lag because we have orders in the system. Otherwise, mostly in international market, every month we have a price updation list, so it immediately is passed through. Domestic also it's been passed through. So the impact will be felt in Q1, as I mentioned a while back. Being an innovative company, we are able to pass through the raw material increases, and we are able to give value proposition to a customer. That's why they come back to us.
Fair enough, and this is largely known. It's almost, you could say, 60 to 70-year-old brand. But I want to understand a little bit more about the domestic business. The Middle East disruptions, as we're speaking about, I just want to get a little bit more views on this domestic dealer offtakes. Is that delay continuing, or has that bottomed out or improved as we speak right now?
In domestic, we have two parts of business. One is geosynthetic, which is the slope protection infrastructure business, which is doing actually very well. It's been growing at the rate of 40% last 3 years. So that business is still doing very well. There's no impact of West Asia crisis on that business. The pipeline is very positive. On the other side, the domestic business, which is industrial business and fishing business, that business was not doing well last few years, but it has now bounced back in a very big way. The construction business, construction safety business, and other businesses, oil and gas business, all is doing very well. Transmission business is doing very well. So these businesses are doing well. In domestic market, obviously we have a channel through which we serve the customer, which is a dealer and distributor. So when RM increases by such a level, they obviously hold on to their purchases, they don't buy. So there is some lag, but I think now things are settling down. Everybody's understood the impact of this war and the raw material impact. So I think things are going back to normal. In terms of demand side also, I don't see any major impact. One point is that at this point, there is some doubt in everybody's mind in terms of monsoon outlook. So some businesses may get impacted, but we are waiting and seeing the impact of monsoon. So at this stage, I think overall domestic also looking very positive.
So short term, there are some issues, but Shujal, let's talk a little bit long term, FY28, FY29. The margin outlook, how does it look? It comes back above that 20% mark on a consolidated basis. How does that look? What are the levers for the margins?
So in terms of margin outlook, I think we will be in the 20-21% range. That's our last few years trend. So that if you see our Q4 margin was very good. So we will maintain those kind of margin profile. That's I think the intent, and that's the drive that we are pushing. As far as the outlook is concerned on some of the segments, so if you look at our business, 80% of business comes from value-added products and 20% is still commodity, on which we are working in the rope segment. These are mostly the value-added ropes in oil and gas. They could be in transmission, they could be in shipping and mooring. So that segment is where we are working on to upgrade our customer profile, our product profile, and move to a value-added segment. That may impact positively on our margin, but I think overall margin will remain range bound, so to say, and we'll maintain the 20-21% margin.
And also there is a little bit of concern, especially from the long-term investors. Okay, fine, margins remain stable. What about the top line growth? Last 3 years, it's been largely single digit on the CAGR basis. So of course, the top line growth is also something which the street wants to know more about for your company. Any kind of, targets which you have set, if 3-year target or a 5-year target, which you'd like to share?
As a company, we focus on bottom line. Our aspiration is to double our profit every 5 years. And we are well on track, at least in FY27, to be able to achieve that objective of doubling our profit in 5 years. So you can assume our bottom line growth at about mid 15% or around 15% level. As far as the impact of last year is concerned, if you see last year was not a great year for us. There were 2-3 big impacts toward the end. I spoke about the supply chain issues, but also around Q2 time, what happened, normally salmon farming, which is like 80% of salmon which is consumed in the world is farmed. Salmon farming takes about 12 to 14 months for a salmon to be produced in the fish in the water. For some reason, this cycle was reduced by about 1 month, 1 to 2 months, about 4 to 6 weeks, so to say, which essentially meant more salmon in the market and which impacted the salmon prices. And our customers, in a way, cut down on their capexes, which impacted us in a big way in Q2. But that situation is now resolved, and the last quarter orders were there, which I think we were able to produce and execute, but we couldn't get the sales. And so that impacted F26 in a bit way. But also you would also appreciate that 10% of our profit comes from USA, where our sports business is a very big segment, which also got impacted last year for about 6 to 7 months due to overall 50-55% tariff.
We were able to hold on to, right. On your US business for the nets, right now the FIFA World Cup is going on. Just out of curiosity, are the football nets being made by your company?
We don't know, because we normally supply to our distributors. Okay. So I would say there's high probability it could be our net, but we don't know, because we don't sell it as a branded product. We sell it as a catalog product and supply to our distributors who sell it eventually.
Fair enough. It's wonderful to have a chat with you. And it's always a pleasure, Shujal, to be with us at NDTV Profit. Best of luck for your company and the future. So that's a very interesting take coming in from the management. But yes, there are problems, there are inventory issues, and it's going to take some time, especially on the demand front. But a very interesting company, right? So for all these interesting stories on these companies, keep watching KYC. And yes, stay tuned to NDTV Profit.